What's up, everybody? Welcome to the Stocks channel. Today we saw the bulls battling the bears at a very critical support level, and the market is getting ready to move for the next leg higher. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today SPY was down 0.37%, and there were two critical risk levels that I gave you to pay attention to, and that was the rising 20 daily moving average at 473 and this breakout level at 475, and today we did test both of them. So looking at the trend, we still have the bull trend intact with all of these moving averages still stacked to the bullish direction, and we still have price action above the rising 20 daily moving average, so there's no reason to believe that the market is not preparing to push for that next leg higher. And I do believe that next leg higher will test a brand new all-time high, which will be above that level at SPY 480. Now, as I always tell you, follow the trend, but you need to be able to manage your risk if the price action tells us to, and the breakdown below the 20 daily moving average at 473 will tell us to get more risk off. So if we start to see price action breaking down below this risk level, then we're likely coming back down towards 467, which is a very critical support zone. If we can't hold 467, we likely push all the way down towards 458, or at least the rising 50 EMA in the low 460s. So 473 is going to be a great line in the sand of whether we're pushing towards that brand new all-time high or coming to much lower support levels. So that really should be your focus this week, is watch that level at 473, and if we start to bounce from there, we are likely going to see a brand new all-time high in the month of January. Now, once we get to a brand new all-time high, there's a lot of scenarios that can play out, being blow-off top short squeezes and possibly even false breakouts to much lower prices, but we're going to cross that bridge when the time comes. Right now, we're simply following this bull trend, and the price action is still above support. As long as price is above support and we still have a bull trend, the probability and the highest likelihood is that we're going to continue to climb higher, and that is why I always tell you that the trend is your friend, so simply follow the trend until the price action tells us not to. So the highest likelihood chance is that we're going higher and we're getting more risk off if we break down below 473. Keep it simple, it really is just that simple, and there's no reason to overcomplicate what we currently see on this chart. On the NASDAQ 100 triple Qs, we had a very exciting day, going down 0.01%, and obviously that is a very flat, boring day, but if you look at the price action, we are still above this critical risk level at 404 and the rising 20 daily moving average of 406, and the price action is above all the moving averages after the close. So you can see all of these moving averages are positively sloping, and we do have the bull trend, especially while we're above the rising 5 EMA, which is increasing the probability we're going to continue to push higher towards my price targets that I have at 414 and 420. Now your risk level could be anywhere down here between 404 and 406, and if we break below that, then we're coming back down to the critical support at 396, which is also going to be that rising 50 EMA. So pay attention to the chart, because right now the chart is telling us we're likely going to continue to climb higher, and we did see brand new all-time highs today in Microsoft and Nvidia. And those are top 10 companies in the NASDAQ 100. So if those are pushing out to brand new all-time highs, it's not unheard of that the triple Qs would be right behind them. On the Dow Jones, we were down 0.6% today, and the Dow Jones did break and close below the 20 daily moving average, which was that risk level at 375. And I told you if we broke down below 375, we could come back down towards 370. So now that we're below 375, look for a test of this support zone right around 370. And then below that, we have one more support right around 367. And if we break all of that, we're likely coming back down towards 360. Now, it is possible the Dow Jones is just building out a bull flag and building out a range, which you can clearly see if you draw out these highs and the lows down here right around 370. So as we're going down towards 370, that is going to be a support zone to pay attention to and not time to be panicking, because you're already getting a lot more risk off below 375. You should have already reduced any long exposure you have in the Dow until price action can prove that we can find support at 370. Remember, when you're following price action, you don't ever want to assume you're going to hold support, because there's always this scenario where you just go straight down where the bears take the elevator lower, and if you go straight down to 360 and you're buying the whole way down, you're going to be very disappointed if we don't bounce and find support. So never rule out the possibility of a crashing down elevator, even though I'm not saying that's going to happen. This is a more risk off look below this 20 daily moving average at 375, which means you should be a lot more risk off while below 375. If we can get back above 375 to 377, then we're likely pushing towards the brand new all-time high price targets in the mid 380s. On the Russell 2000 IWM ETF, we were down 1.24% today, and last week I told you I thought there was a good chance we were coming down towards this support trend line right around 189 to 190, and then from there I expect to see a bounce higher towards the gap fill below 199. So today we did get the move lower, and from here I do think there's a very low risk long trade to be had here from the risk level at 189. And from 189 all the way up to close the gap above 198, that is a very low risk, high reward trade if it indeed works out. So that is definitely what I'm paying attention to in the small caps. If we break down below 189, we could come back down to retest this breakout at 186. And then below that, we have the 200 daily moving average and support zone right around the low 180s. On the ARKK ETF, we were down 1.31% today as we have the second day down below the 50 EMA. So this is looking like a lower high, lower low rejection that is likely taking us down towards 46 and then 44. And the rising 200 daily moving average is just below 43. So this is definitely a more risk off look below 48. And if we can get back above 48, then we'll be looking for that resistance between 50 and 51. On the VIX, we were up 4.46% today as the VIX is spiking back to the top of this range right around 14. And this has been a VIX range we've been stuck in for quite a while now. And remember, the VIX going up anywhere below 15 is not bearish. That's simply just a pullback within the markets. We would really need to see the VIX getting out here into the 18 and 20s before we started to get high volume panic selling. So pay attention to the VIX, and right now it's simply just telling us we're getting a pullback within a bull trend, and we're going to get a lot more risk off if the VIX continues to spike and gets all the way up here above 18. On Bitcoin, we're currently up just over 2%, and Bitcoin is trying to hold this support right around 42,000, and it's still possible from this bounce off of 42,000, we could get a lower high rejection and still hit the price target down here at 38,000. So a simple way to play Bitcoin is assume it is still going lower while it is trading below 44,500. And if we could break back above 44,500, that will be the break of this range yet again, and this could be just a simple retest of support before we continue higher. Now remember, Bitcoin sold off on the ETF news of the Bitcoin ETFs, and this is typically buy the rumor, sell the news type price action. So I don't believe sell the news is quite over just yet, so I'm still leaving this price target at 38,000 as my most likely scenario while we're trading below this resistance at 44,500. In order to get more bullish, we can break above that resistance and then the resistance at 47,500, and then we'll likely push higher towards 50,000. On Nvidia stock, we were up 3.06% today, and this stock is the one I constantly remind you to not bother shorting, because even if you don't think this stock is going higher, it does look like it is trying to get to the 600s, and that is not a stock you want to be shorting. So we did break my price target at 551, and I told you above 551 we would likely go towards 563, and as you can tell, that is exactly where we closed today. So we are outside the upper Bollinger Band every single day that goes by, which means that we are getting overextended, but I'm not expecting a drastic correction or pullback. I'm simply expecting Nvidia to consolidate within this range because we do have earnings coming up very soon. So there's no reason to short this stock. It still looks incredibly bullish, which you can tell by all of the moving averages very positively sloping and all stacked to the bullish direction. And now Nvidia simply needs to hold the previous price target, which is the new support at 550. So you can see how very quickly this stock can climb and turn old price targets into support. That's why I suggest you don't bother shorting it, as it's likely going to just continue higher and continue making brand new support levels. If we do break down below 550, then you'll be looking for the 5 EMA of support, and then this level down here right around 532. On Tesla stock, we were up 0.47% today, and last week I told you Tesla would likely come down here towards this support right around 214, and from here I do expect to get some kind of dead cat bounce higher towards 225 and then 231. Now keep in mind, dead cat bounce simply means it's a lower high bounce within a bear trend, so once we get to those price targets, it's possible we do continue lower. So just because I'm saying we bounce towards these higher levels doesn't mean you're bullish on this stock, it simply means it could be there for a short quick trade. Now after we bounce to the lower high, we'll have to see whether or not we can get back over that 200 daily moving average and start to reverse the current bear trend of the short-term downtrend. So in the short term, I do expect Tesla above 214 to reach into the 225 to 231 zone. And then if we break through that, we'll need to see if we can push higher towards my resistance at 244. If we can't get to these price targets, this is simply just a dead cat bounce until we continue lower. So you can also pay attention to that resistance right around 222. If we do break down below support at 214, I have another very strong support between 207 and 208. On Apple stock, we were down 1.23% today as Apple did get rejected from that resistance just below 188, and we did come back down to the critical support at the rising 200 daily moving average at 181. Now, as far as Apple goes, I'm still expecting it to climb higher towards 192 as long as it's above 180, but if it breaks down below 180, I think you need to get risk off. Below 180, we would likely come back down lower towards 177 to 174, but as long as we're above 180, it is still likely that we're trying to push higher into the 190s. So from here, I would look for the gap fill at 185, and then if we break through that gap fill and continue higher, look for resistance right around 187, and then we'll be looking for that push higher towards 190 to 192. So jumping back over to the S&P 500, I still believe the bulls are in control, but they are battling the bears here near the previous all-time high, and there's a lot of people coming out of the woodwork saying that the S&P 500 is going to double top at the previous all-time high. There's no reason for anybody to be saying that or believing that. Let the price action do all the talking, and we currently have a bullish trend with bullish price action pushing into that zone. Keep in mind that the highest probability chance currently is that the S&P 500 makes a brand new all-time high, which means we would push right through that level at 480. It doesn't mean it's going to happen, but if we're playing the game of odds, that is the highest probability chance. So block out all the noise, follow your charts, and manage your risk around these critical levels that I give you each and every day. And that way, even if you're wrong and you're losing a trade, you are managing how much risk you're taking on during these trades, and you can still become a profitable trader. Remember, as traders, your job is to be a professional risk manager. You are guaranteed going to lose trades throughout the year. Your job is to make sure that you lose less than you profit, and that is how you ultimately become a profitable trader. There's no get rich quick schemes. Everybody that's trying to get rich quick is getting absolutely destroyed by this market because they're over leveraging, and it only takes one loss on an over leveraged trade to get wiped out. So get disciplined, get focused, understand that you need to follow your charts and you need to manage your risk around these critical levels. We are going to absolutely crush the market this year on bank trade alerts, and we are already crushing the market this year. So if you want to come crush the market with us, you can find out how to join bank trade alerts below. And on bank, you will get all of your buy and sell alerts for the TQQQs and the SQQQs via email and text message. If you want access to all of my intraday updates and analysis, then you need to be on the Stocks Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.